So that's really important that they plan ahead, right?
Whenever possible. Yeah. And it's great when I get people that are planning ahead because it gives them advantages in their exchange.
Good day. I'm Janice Spooner and your host for Banking on Success Together. I am market president for Great Plains Bank in Southlake, Texas. And each month we have this podcast and it discusses economy, real estate, small business, consumers, what's happening in our national and local economies as well. So today I'm very excited about what's happening in the country and what's going on, especially in DFW. So we have a very special guest that's going to be joining us in just a few minutes to talk about 1031 exchange. So stay with me. In just a few minutes, we're going to be talking about real estate. And that's important because of what's going on in the economy. As always, you will hear on this podcast, and has been for recent months, the Federal Reserve remains a hot topic, with a 90% probability that analysts expect the Fed to stay pat, right where they are on their January 29th, 2025 meeting. However, potentially there could be some room for movement downward in March. So we will be watchful of that and keep you posted. Economists really have a lot to ponder as we go through the current times with the incoming president, Donald Trump, and his administration. Proposed policies such as tariffs and tax cuts could lead to inflationary pressures influencing the Fed's decisions. There's a lot going on being said each day about what is happening in our economy and to get rates down. However, recent data indicates U.S. jobs increased by 256,000 jobs in December of 2024, taking our unemployment rate down to 4.1%. This strong labor market performance supports the Federal Reserve's decision to keep rates static right now. The stock market has exhibited notable strength the beginning of this year with, as we enter 2025, the S&P 500 has increased by 3.6% already, nearing its record high. Approximately 80% of the S&P 500 companies have surpassed Wall Street's earnings forecast, with companies exceeding consensus per share earnings estimated by 10%. A significant improvement over the previous quarter. There's a lot impacting their decision in our economy right now. However, only 12% companies have reported results so far, and concerns about revenue growth and stock valuations persist. Analysts are optimistic about the market's trajectory, citing strong positive sentiment, potential deregulation initiatives from the incoming Trump administration, and advancements in artificial intelligence as key drivers. Some forecasts suggest the stock market could potentially gain another 20% in 2025. However, don't do anything rash. Risk such as potential tariffs, deportation, and possible recession loom, making cautious optimism necessary. Additionally, it's important that we look at global, and U.S. and UBS global equity strategist Andrew Garthwaite notes that 6 out of 7 conditions indicating a stock market bubble are currently met, though the market is not conclusively in a bubble yet. Let's break that down. What does that mean for you? With strong earnings reports and optimism surrounding deregulation and AI, investors still remain bullish. However, risks like tariffs and possible recession highlights the need for diversification. You'll hear me talk a lot about diversifying portfolios in your financial strategies, so stay tuned each month as we talk about that. If I were to have to give you a key takeaway, I would say stay informed and keep balanced your financial strategy. So important. Let's get on to our local economic insights. Great news for North Texas. DFW has been ranked the #1 real estate market for investment and development in 2025, thanks to our thriving economy and our rapid population growth. That means rent costs and housing are going to continue to go up. And because with rent costs now surpassing those in Austin, affordability is becoming a concern. This could mean increased demand for suburban housing and creative financing solutions, some of which we actually offer at Great Plains Bank. I can connect you to our mortgage specialists. Okay, so we've talked about global, national, and local economics. We cannot have this podcast without talking about small businesses. They still have a lot of forces impacting them on the daily. So it's important that we continue to support them and shop local. However, one big topic that you probably have all seen on the news is the ban on TikTok, the potential ban on TikTok. Many DFW small businesses depend on TikTok for marketing. If a ban happens, they'll need to pivot to platforms like Instagram Reels and YouTube Shorts. The situation remains dynamic, and further developments are anticipated as a new deadline approaches. Business owners, now is the time to diversify your marketing and your advertising and your online presence. I can connect you to a great PR firm, so please give me a call at the bank and I will. We encourage everyone to continue shopping locally and support not only myself, Great Plains Bank, but our local leaders all across DFW. Stay engaged, commit to shopping locally and supporting small businesses. Now, as we get to our guest segment, real estate investors often look for ways to maximize gains and defer taxes. One of the most powerful tools is a 1031 exchange. To break it down for us, I welcome my guest, Patrick Noonan, a 1031 exchange specialist from IPX 1031. Patrick, thanks for joining me.
Good morning, Janice. Thanks so much for having me today.
Absolutely. I'm so excited, especially with the given news of our economy for real estate. And that was by the New York Post. So this is big news across the nation that small businesses and real estate investors are coming to Dallas, coming to Fort Worth and the surrounding metroplex. So tell me a little bit about yourself, and then we're going to break down what a 1031 exchange is.
Okie dokie. I work for IPX Investment Property Exchange Services. We're the largest qualified intermediary in the country. We're part of the same family as Fidelity Title, Lawyers Title, Alamo Title, but we work with all the different title agents, attorneys, informal closings all over the country. My region is here in Dallas and North Texas, Oklahoma. I manage 1031 exchanges for all different types of investors, whether it be somebody who's investing in a rent house, selling that, up to close to $1 billion in corporate campuses or office buildings. So you name it, everything in between. It's people's money, so it's important no matter what size or type.
I feel the same way. It's people's money. It's important. Mm-hmm. So let's break down and let's start basic with what is a 1031 exchange and why is it important to real estate investors and small businesses?
That's a great question. So 1031 exchange is actually part of the IRS tax code, right? So it's section 1031. It's been around in one form or fashion since 1921. It was originally started by a farmer who was just trading deeds for other farmers to try to conglomerate pieces of property into larger tracts. As it's evolved over the years, we now have what we call the 1031 exchange for standard, sell first, then buy, and reverse exchanges where you're buying first, then selling, build to suit exchanges where you're using tax deferred dollars to acquire and improve property. We're seeing kind of a wait and see for the last quarter of 2024, although the activity seems to be sparking up right here in the beginning of 25. People are getting off of the sidelines. So 1031, what it does, it defers the capital gain tax that you would normally pay when you sell investment property. That could be 15%, 20%, up to 23.8% here in Texas. There's no state capital gain tax. In other states, there's a state capital gain tax, which can, if you look at California, it's around 13.8%. So all of that starts to add up fairly quickly. And the purpose of 1031 is to defer that capital gain tax that you would normally pay by reinvesting in new investment property. So you can sell one, buy multiple, sell multiple, buy one through 1031 exchange. There's oddly flexible parts of 1031, and then there are very rigid rules for 1031. So you need somebody that's an experienced, qualified intermediary to navigate you through the rules, regulations, timelines, what have you.
Wonderful. What can a real estate investor expect to achieve through a 1031?
Well, there's multiple ways that you can benefit from a 1031 exchange. The main benefit, of course, is the tax deferral. People incorporate it when, let's say, they've got an asset that they fully depreciated, right? So that they've got significant tax liability on that depreciation they've taken, and perhaps they don't have the ability to take that depreciation any longer, so they can sell that property, go out and buy a higher value asset so that they can begin taking depreciation again. You can move markets. So if you're in let's say you've got a property that's in a declining value, in rents, in terms of rents, you could sell that property and move to a higher income, or where you would expect more income from rents and things like that. People that are self-employed and have, whether it's a garage for a mechanic or a doctor or a lawyer, or anyone who has an office, they can sell that office and move that to another property, and defer the taxes while doing so.
Okay, wonderful. That's great news. What types of property can be included in a 1031 exchange?
That's a really good question, because there's a lot of misconceptions about that. There's a way that people refer to 1031 as like-kind exchange. Well, like-kind is very broad. It doesn't mean if I sell a gym, I have to go buy another gym, or if I sell a rent house, I have to go buy another rent house. You could freely exchange property types with 1031 exchange. So you could sell land and go out and buy retail, office, industrial, warehouse, rent houses, multifamily. All of those types of properties can be freely exchanged with one another.
Okay, great information. What's the process? What is the process for a 1031?
So the most important thing about a 1031 exchange is it gets set up prior to the close of escrow of any property, whether it be the property you're selling in a standard exchange, or in the case of a reverse exchange, before you acquire what we call a replacement property. Number one, that's because I get people calling me every week, even people, that have perhaps attended a class or something, and it's maybe a year ago, and they say, "Hey, I just closed on my property. I'd like to do a 1031 exchange." Well, in that case, it's too late. In the eyes of the IRS, the taxable event's already occurred. So of most importance is getting it set up. And that's just talking to somebody like me or me, and I'll get the documents prepared. We'll work with the title company so that everything is ready for their closing. And we've established an exchange account. Funds will come in from buyer and lender. And then they will be forwarded by the title company to my company, and we deposit those funds in a segregated account.
So when they close, they needed to have already identified that they're going to use a 1031, connect with you beforehand so that it's all set up, because I'm sure this can't go on forever. There's a deadline.
Oh yeah. Yeah. Now the deadlines, that's another really important part of a 1031 exchange. They don't move, right? They're inflexible, written in stone. So think of a 1031 as having a lifespan of 180 calendar days. Okay. The first 45 days of that 180 calendar days is the identification period. So the exchanger or taxpayer will need to submit to us prior to midnight on day 45 a list of properties that they plan to purchase or would like to purchase with their 1031. If they don't make an identification, the exchange terminates at midnight on day 45. Their funds are returned to them the next business day, and they just go about paying their taxes as they would have had they not attempted an exchange.
Okay, so that's really important that they plan ahead, right?
Whenever possible. Yeah. And it's great when I get people that are planning ahead, because it gives them advantages in their exchange, right? Say you come to me 2 months before your closing is supposed to occur. Well, that gives you more time to go find properties, potentially even getting under contract on the property you want to buy as a replacement, so that you're not trying to do it all in 45 days. As you know, getting due diligence done in 45 days may not happen. So let's say they identify a property and then find out on day 46 or 50 or 60 that for whatever reason they can't close on the property. Well, there's no changing your identification. So if that's the only property that you've identified, you're basically done with your exchange. You can't go forward and buy that property. The second aspect of that is when you've got an identified but unclosed property, the IRS requires that we hold the funds until the 180th day. So having those funds stranded could be a hardship for people. So I go to great lengths to tell them, hey, look, you can make your identification, but in most cases, you want to be almost 100% certain that you can close on what you identify, especially if having those funds stranded for 180 days would be a hardship.
Wow, that sounds really tough. And that's hard and fast. There's no waiver.
There's no changing in the deadlines, and well, let me just, there is one, but the only reason when deadlines are extended is if there's a federally declared disaster area, either where the exchanger lives or where the property that they're selling or buying is located. In some cases, they may fit in a very small window so that they can qualify for an extension. But other than that, there's just no extensions.
And all those details, obviously, when they're using an expert like you, that's one of the key values that you bring, is shedding that light, giving them the information to make sound, educated decisions, because are there limits to how many properties they can identify beforehand?
Yeah, with 1031, you're going to find there's rules within rules. Mm-hmm. So within the identification period, you've got 3 property identification rules. The first rule says you can identify up to 3 properties with no cap on their combined fair market value. The second rule is a 200% rule. It says if I identify more than 3 properties, it may be okay so long as the combined value of what I have identified doesn't exceed 200% of what I've sold. And then the last is the 95% exception. Isn't really relied on very often. It's got a very specific set of circumstances where you're going to use it. The 95% exception says if I go past the 3 property rule and the 200% rule, I could still have a valid exchange if I successfully complete on 95% or more of what I identify.
Well, thank you for getting in the weeds there.
Yeah.
It's important that someone does really take seriously the value that you would bring to a transaction like this, because it could save them hundreds of thousands of dollars on
Absolutely.
taxes.
Mm-hmm.
So with each new venture or business transaction, there's always pitfalls, whether it's real estate, a small business, however, whatever the case may be. From my perspective, in regards to financing, there can always be pitfalls. Well, are there any pitfalls for 1031 exchanges?
Yes, there's some standard pitfalls that we run across every week, right? Exchangers that may be part of a partnership or an LLC that want to exchange individually from each other. That requires some outside legal help for them to analyze their situation and see if an attorney can help them separate that partnership so that they can exchange individually. Some cases they will be able to, some cases they won't. Often people want to exchange fairly quickly after they buy a property. Let's say a good example would be a flipper, right? Somebody who goes and they buy a property, they improve it, and then they sell it. The IRS doesn't like that for 1031 exchange. They consider that a separate category. So that's considered resale by the IRS. 1031 is designed to defer long-term capital gain, which only occurs after you've held a property for over a year. So under a year, you're looking at, perhaps more of a red flag to the IRS, and intention goes a long way in the way the IRS looks at the eligibility for a 1031 property. So if your intention is to buy it and operate or rent the property, perfect, right? If your intention is to resell, it's not good. It's something that the IRS potentially could disqualify the exchange over. If you look at kind of an example I like to give, which is more extreme, but if you look at home builders like Pulte or Horton, they don't exchange anything because they know the IRS looks at those properties as intended for resale, which it's not worth the process and the expense of going through an exchange when it's not really eligible.
Right. Well, having a partner like you to help my customers in particular is just invaluable to me. And I am very passionate about education and helping customers in our community make informed decisions. So if you had any words of wisdom that we haven't already talked about, please share those and then tell everyone how they can reach you.
Okay. Yeah, I'd suggest earlier the better, right? When you're talking about selling investment property, the sooner you talk to a qualified intermediary or an attorney who's familiar with 1031 exchange, which is kind of rare, or a CPA that's also familiar with 1031, the more preparation you have in advance of a closing, the better off you're going to be, because we can sometimes remedy situations that may not be remedied if you were to call the day before your closing, for example, which we can certainly have an exchange set up if you call us the day before your closing. However, there's just a lot of information that you may not have the chance to walk through with me or somebody like me to give you good advice and tell you what, like you said, pitfalls, things that might get in the way of their exchange.
All right, great. Tell everyone how to reach you.
Sure. My office is located in Dallas at Preston and Frankfurt. My email is patrick.noonan, and that's Noonan at ipx1031.com. And you can also reach me on my cell phone, 972-310-4127. And being in the real estate industry, like brokers and mortgage people, I've got to be available pretty much anytime. So after hours, weekends, whenever you need to have an answer, just give me a call.
Fantastic. Thanks for taking the time today to join me and share all this valuable information.
It's been a pleasure. Thanks so much for having me.
Absolutely. All right, let's switch gears and celebrate some wonderful individuals in our community. And I talk about that each month because it's important to me and my community to celebrate great people. Carroll ISD's Board of Trustees recognizes 3 staff members each month during school, and that those particular individuals, 2 are teachers, 1 is someone of the administration or supporting departments. And so this month for #Inspire Excellence Award, these 3 ladies were awarded the award for Inspire Excellence. Tess Flynn. Tess teaches Latin at Carroll High School. Debbie Copeland. Debbie teaches 6th grade at Eubanks Intermediate School. And Patricia Smith is an admin in transportation. Ladies, thank you for your commitment to excellence and to our future leaders. We could not survive in this world without you, so thank you, and glad we could celebrate you and provide you with our gift this most recent past month. Additionally, a huge shout out to our latest Dragon of the Month recipient, Miss Laren. She is a senior at Carroll ISD and has great ambitions going forward. It's going to be an incredible journey for her, and we were able to support her with a $500 scholarship. So if you know of anyone, viewers, that is a Carroll ISD senior, have them go to our website at www.gpbanktx.com and apply for that scholarship. Again, it is and follows the Carroll ISD school calendar. I invite you to visit our website. Just gave that to you, but also come by the bank or call and start learning what it truly means to me and my staff here in Southlake to provide a hometown bank experience with all of the resources and tools that you need to be successful in your business, in your financial planning, and all of the wonderful ways that we can support you. I am Janice Spooner, your monthly podcast host for Banking on Success Together. And this is a conclusion of today's broadcast. I will say, as always, stay well, give kindness often, and remember, we are greater together.